$2 trillion vanished, the massive wealth shock that rocked the U.S. stock market. In one of the most dramatic financial swings in recent times, a staggering $2 trillion in market value has been wiped out from the U.S. stock market in just a single week. This sudden collapse has not only shaken Wall Street but has also sent a powerful message across the global economy. Wealth in today's world can disappear just as quickly as it is created. The impact of this massive loss was clearly visible in major market indexes like the S&P 500 and the Nasdaq Composite, both of which saw sharp declines as investors rushed to pull out their money. These indexes represent the backbone of the U.S. economy, tracking top corporations across technology, finance, healthcare, and more. When they fall this hard, the effects ripple across industries, countries, and everyday lives. To truly understand the magnitude of $2 trillion, consider this: it is more than the entire economic output of many countries. This isn't just a loss on paper, it represents a massive drop in investor confidence and corporate valuations. Companies that were worth hundreds of billions suddenly saw their value shrink within days, highlighting how sensitive markets are to fear and uncertainty. Several key factors likely contributed to this sharp decline. Rising interest rates remain one of the biggest pressures on the market. When borrowing becomes more expensive, businesses slow down expansion, and investors move their money into safer assets like bonds. At the same time, persistent inflation continues to erode purchasing power, making both consumers and investors more cautious. Global uncertainty also plays a major role. Ongoing geopolitical tensions, economic instability in major regions, and concerns about a potential recession can all trigger panic selling. In today's interconnected financial system, even a small piece of negative news can spread quickly and influence markets worldwide. Another important driver is the structure of modern trading itself. With the rise of algorithmic trading and high-frequency transactions, markets react faster than ever before. Automated systems can execute massive sell-offs in seconds, amplifying downturns and accelerating losses. What might have taken weeks in the past can now happen in hours. For the world's wealthiest individuals, this kind of market drop can lead to eye-watering losses. Billionaires whose fortunes are tied to stocks often see their net worth fluctuate dramatically. A single bad week can erase billions from their portfolios. However, these losses are often temporary unless assets are sold during the downturn. But it's not just the ultra-rich who feel the impact. Millions of ordinary people are connected to the stock market through retirement accounts, mutual funds, and pensions. When the market drops, it can affect long-term savings, delay retirement plans, and reduce financial security. This is why headlines like $2 trillion wiped out resonate far beyond financial circles. They touch everyday lives. Despite the fear surrounding such a massive decline, history shows that markets are cyclical. Crashes and corrections, while painful, are a natural part of the economic system. Over time, markets have consistently recovered, often emerging stronger. For experienced investors, downturns can even present rare opportunities to buy high-quality stocks at discounted prices. Still, the emotional impact of such a huge loss cannot be underestimated. Events like this create uncertainty, trigger panic, and test the confidence of even the most seasoned investors. It becomes a moment where strategy, patience, and discipline are more important than ever. Ultimately, the disappearance of $2 trillion in a single week is a powerful reminder of the volatile nature of wealth in the modern world. It shows that financial markets are driven not just by numbers, but by human behavior: fear, greed, optimism, and doubt. As the dust settles, investors and analysts alike will be watching closely to see whether this is just a temporary correction or the beginning of a deeper financial shift. One thing remains certain: in the fast-moving world of global finance, fortunes can change overnight, and the line between massive wealth and sudden loss has never been thinner.